Hello, how much capital is needed to start swing trading? Well, to start swing trading, I think you need a minimum amount that the brokerage firm set as the minimum account to open a brokerage account. You need that minimum if that minimum is enough to buy one share of stocks. So that's all you need, in my opinion. If, for instance, if the brokerage firm you are opening your brokerage account with, and in this example, Charles Schwab, if $100 is what they say as a minimum dollar amount to open the account, that's all you need to start swing trading. And I'm sure you'll find stocks that cost less than $100. Walmart is one of those, for instance, when it's on the low side. So when you create your watch list, you will pay attention to how much those stocks are costing, your master watch list. You will filter your list. You'll have the price those stocks are costing at that time frame, because the price can vary depending on where the price is on the trajectory on the chart. And today we are going to analyze WSO when the stocks is somewhere here, the price is going to be higher, and when the price is at the valley line, the price is going to be lower. That's why on my master list I don't really feature a column for price, because the price is now going to be the same as the beginning of the year or the end of the year or the middle of the year, or even daily the price changes. But you can use that at the point time frame that you are selecting, you are creating your watch list. You can use that to narrow down your master list to a small list of those stocks that cost less than $100 a share, for instance, so that you have your watch list of those. And then you analyze your stocks. So when you find one that is well set for you to purchase, you purchase one share, and every month you will continue saving money from your paycheck to add to your swing trade account. And this advice is based on you not borrowing from the broker to swing trade with, but you are using your own money. That is the safest way to start. That way you don't owe anyone anything. If you are trading with your own money, and maybe trading with your own money, there could be some risk, some unnecessary risk that you will not want to take with your own money, your hard-earned money. And you will avoid paying a high margin fee on your on your transactions as well, because you are now using the broker money, but you are using your own money. And I think a lot of brokerage firms might set a minimum dollar amount to open your account with. I opened our account with Charles Schwab long time ago, many years ago. Therefore, I don't know their rule now, but I think back then it could be $100, but you can open it without anything, and then when you link your checking account to it, you can do your transfer. And I know that for mutual fund with some brokerage firm, or investment firm, they might say $1,000 to open a Roth IRA or an retirement account, especially if you are going to transfer from an employer 401k to an IRA account, they'll want you, the minimum the transfer you are going to do to be at least $1,000 for those. But when it comes to trading stocks brokerage account, I think it's like $100, but it could have changed by now. So it'll be worth the company you want to create your brokerage account with. It'll be worth checking their website to see what the minimum is. And again, you just start small. It's not that you are going to stop investing your money in your account, but you are going to create a capital that you are going to use to swing trade. Therefore, you will start small and keep adding money to your account every month or each time you can, and then swing trading from there. Last year, my kids, I taught them how to swing trade, and the account have about 3,000 or 4,000. That's the value, and they have about 1,000 available in it to, like, cash wise, to swing trade. And I just did my own calculation and let them know that per trade, not to each trade need to be within $300. That way they do not spend all their capital on one stock, and then that way they can continue doing it. And so, but as for me, for instance, last year when I started swing trading, I pretty much decided that per trade I will spend about $2,000, and I will aim for $25 profit. And I was swing trading using short option and swing trading strategy. I will buy every few days and sell it every few days or every few weeks. So, and I use a small dollar amount to start swing trading. The account was bigger, but again, I used that amount, so per trade. But when, for my case, they have about $3,000 in the account, I assume $300 per trade is good for them. And for 2025, after going through 2024, for 2025, I spent more. At the beginning, I started with 5,000, and then I went to 10,000 per trade for some of them. But going into 2026, and the strategy that I use for both were different. In 2024, I noticed that buying stocks every few days and selling it every few days, those arrows, we have the date on the x-axis from the past to the present, and the price is from 0 up on the y-axis. The arrows facing upward shows where we purchased, and the arrows facing down shows where we sold. We are using maximum daily chart, so that means every candlestick on the chart is 1 day time frame. So seeing those arrows just shows where we purchased and where we sold. So we purchased it there, we sold it there. We purchased it there, we sold it there. So every few days we are able to buy and sell for profit. And with that strategy, I noticed that I was turning over my cash quite a bit. Like, I have more cash in the account than stocks that I was swing trading in the portfolio. For long option and swing trading strategy that I'm using this year, which consists of buying at the support line, passing by the valley of the mountain, to sell at the around or after the peak is reached, to sell it around the peak of the mountain. I will stay in the trade longer. Therefore, by allocating more money per trade that I set as a rule at the beginning of the year, and doing 5,000 or 10,000, I noticed that very quickly I run out of cash in the account because I have stocks that they are either negative and I'm waiting for them to become positive and then to climb the mountain before I sell it. And there are some stocks that are positive because they reach the peak, but I know that there is more peak they are going to reach before I sell them. So therefore, as I'm staying longer in the trade, and because I'm staying longer in the trade, I don't have enough cash in the account, the portfolio, but I have more stocks that I purchased for swing trading purposes in the account. Therefore, I need to continue adding money to the account. And we didn't do much of that this year, but moving forward, that is the goal that I'm setting now as well. And that is one. Second, after trying to increase the amount per trade, because again, with the strategy we are using, in 2024 we try to make profit swing trading, and we confirm that with our strategy we can make profit swing trading with the stocks that we swing traded. And there are some stocks that I purchased in 2024 that I decided that I'm not going to have in my watch list in 2025 because I didn't have good experience with them. There are those, but now that we confirm that there are stocks we can make profit swing trading in 2025, to swing trade them again, I purchase more share. So to increase the profits, I purchase more share. Pretty much the same strategy, but I went with the long up to line version of it. And then I noticed that with that strategy there is another challenge. I will not have enough cash in the account because I will keep those stocks longer. It'll be like a little bit of a short-term investment type of things. So, and with that in mind, going forward, like into 2026, I'm thinking about lowering the amount per trade, the capital per trade that I will allocate per trade, so that I have money in the account when I have a stock that is well set for me to buy. I have money in the account to buy. And doing our budget and thinking about how much I will allocate to the account, I'm thinking about per trade should be less than how much I will put in the account. So for instance, if we assume my husband and I, we take home a total of 6,000, for instance, 50% of that will be sent to our brokerage account to save. The other 50%, which is 3,000, will be divided into half of that. That will be pretty much 1/4 of our take-home pay will go in our saving account for our irregular expenses. And irregular expenses are expenses that you do not pay for every month, but you pay for at some point during the year. It could be property insurance, it could be car insurance, it could be car repair, it could be car registration fee, it could be kids tuition, school tuition, kids back to school purchases, holiday celebrations, birthday gifts, birthday celebration. It could be those things. And if travel is a thing for you, you could add it to it as well. We have a little bit budget in for travel or for entertainment, and because before we didn't have that category, but now we put it back in our irregular expenses so that we can save for. So you estimate how much a year those expenses will be, and that will include home maintenance as well. And home maintenance, one way to do it is to look up the value of your house based on the city. Is something that the city tend to send out every year before they assess the new property tax payment due. or you can go to, there is website out there that you can go to. I don't know if that's what your state will be, and I think it's like a beacon something. When you search it, you Google it, you'll be able to find, I think around here it's like Schneider Beacon something, but you'll find the value of a property as well. And it's based on the city, the states, and you use that, and 1% of the value of your house is what you're supposed to save every month to estimate that. That's why the maintenance of the house will cost you. And you just have those. And if there is a foreseen expenses that you are thinking that will happen, you include those. It could be copay, or if you wear glasses, you know that maybe every 3 years you might need new glasses. You can take how much it's going to cost you based on last time you pay for glasses divided by 3 to have your annual expenses. So those irregular expenses, you estimate them on an annual basis, and once you have the total of those, you divide it by 12, will give you an idea how much you need to save every month, so that in your saving account you have money available to face those expenses as they come along. Even though you may not have money right up there for the whole year up front, by saving it every month and putting in your saving account for those expenses don't happen all at once. You will still have money as you are paying those expenses. You still have money to cover some others, and over time you'll refine that strategy by looking at month that you have most expenses to see. For us is August and September is when property tax are due, those taxes are due. So is 2 months out of the year that's more than 50% of our irregular expenses are due. Therefore, that you'll notice things like that as well. But pretty much 1/4 of our take-home pay will go in our saving account for our irregular expenses, and the other 1/4 will remain in the checking account for our basic monthly expenses. So, and in this example, it will be like 1,500. So 1,500 will remain in the checking account, 1,500 will go in the saving account, and 3,000 will go in the brokerage account for swing trading purposes. But your expenses, your income will be different from mine. So it's good to do your budget to see those expenses of yours, and if there are things that you want, not need, want, that you wanted to cut, or some need that you think there is a room of improving it. For instance, if you have if you have phone this day is a need for some people, or for most people is a need. But if you are paying $100 a month for phone, it's a need, but it's a need that has room for improvement. You can see the next company that you can go with that will pay less. That's how we cut our Verizon. We stopped with Verizon that my husband has been with for years, to lower our phone bill from over $100 or so, or around $100 or so, to $16 a month by switching to Taylor few years ago. And that's how we cut that need, we improve it. And I will say Taylor is not convenient as much as Verizon, but at least it was a good cut for us to lower our expenses, our monthly expenses, and still have a phone. For me, I do things on computers. Laptop is important for me, phone not so much. So I use my phone just for calls and things like that. So therefore, it's not a tool that I use often. But if you use it often, maybe staying with a company that is more convenient, has more feature for you, might be what you will want. But by being with Taylor for some years now, before 2020, I'm kind of used to it. I just know that at the beginning I can see the difference between the two companies, that it was not that convenient as much as Verizon. But because sometimes the line could be a little bit, I may not hear who I was talking to well, but I don't know if that's the quality of my phone or not. I don't have data on mine. My husband has data, but he still pay around $8 or so a month, and I paid about the same a month, so that's about $16 a month from switching from a company that costs us more than $50 a person to $8 a person a month for phone. So sometimes unlimited call, unlimited minutes, unlimited here and there, you don't need those. But again, if you are trying to find a little dollar to pull from your paycheck to be able to swing trade, that might be how you might review your budget. The one things we did as well is car cable. My husband didn't want to car cable, but finally he cut it and switched to Hulu. So cable was more than $70 for us. I would say 70 or 100 as well. I would say 100. And he was able to, we have cable and internet with a company. He kept the internet and cut the cable to save on that 100 and switch to Hulu to pay about $5-6. I don't know how much it is. I think it went up a little bit, but still less than $10 a month. And that is the difference between the two, from close to 100 to $10. And but again, depending on what you watch on TV, maybe keeping your cable might be what you want, but you have to decide for yourself. But that is few ways, and right there we save more than $100 right there by by changing phone company and carrying cable to switch to Hulu. We are able to find $200 or so there that we could easily put in our account to swing trade with. When we are making those changes though, is because my husband got scammed and $thousands, and I told him that he needs to trim. I didn't give him options because I told him about cable, he didn't want to cut it. Told him about phone, he didn't want to cut it. But when that happened, I told him that he needs to review our budget and give me where he's going to cut so that he can have more access to pay that debt, because it was on his credit card to pay off that debt, because we want to pay more than the minimum due every month so that we can pay off quickly. So therefore, to be able to do that, I told him he needs to find room in our budget, and I'm not going to cut groceries budget. Is a need. I'm not going to, a lot of time we go to groceries to try to lower our grocery bill when we are tight on budget, but it is a need. And if you are not buying certain things like that are already made for you, you are buying things from scratch, you already lower your grocery budget already. So cutting down into your grocery budget should be the last things you will do. Find other things that are more some want or need that you can improve, and grocery can be one of those. If you are buying prepackaged food already for convenience purposes, maybe switching to cooking from scratch, if you know how to cook from scratch, might be another option there. But going straight to groceries, if your grocery budget is not extravagant, should be the last things to do, because food quality is important as well, so that you still make sure you are eating quality. I'm not talking about organic food or things like that, but you don't want to cut your vegetables out of your budget, cut fruits out of your budget or things like that. You need those for the nutrient side. The nutrient side of the food is in the vegetables and the fruits. The carb fill us up, the meat fill us up and give us iron and all those as well, but the vegetables is where the minerals the nutrients are. So we want to make sure we are, we do not just cut down on those when we keep cable around that we may not need, or we can switch to a different plan. So those are things that you have to review your budget to see how much you are bringing home, what your expenses is, and to see if you can find a ratio to work with. And you can work with specific dollar amount, but I found that just using those percentage is an easy way for me to quickly allocate our take home pay within investment, saving, and checking account. But again, using those proportion, you have to make sure how much you need in your checking account fit within the proportion you are allocating for it. You want to make sure you are bringing home enough to cover your basic expenses, putting a little bit aside for irregular expenses, like things that will break down that you have to call somebody to fix for you, and then have a little bit to invest. And as for your invest, so in that example, if I'm putting 3,000 in our brokerage account to swing trade, then I want to allocate amount per trade that is up to that 3,000, if not less. That way I will have enough in the account to buy a stock a month. If a stock is set enough and start going up, it's in a position for me to buy, I'll have money that month to buy. If once I purchase it, it will be there for months before I sell it. So that is a strategy going into 2026 that I'm thinking about using. And again, we are going to be using long option and swing trading strategy in 2026 as well. And by trying that strategy this year and allocating 5,000 to 10,000 per trade, I noticed that very quickly I ran out of available cash in the account to work with. Therefore, I have to, again, improve the strategy. So the reason why I'm scrolling here is the column L is showing the amount, and the column J pretty much showing the amounts that we are spending per trade and so forth. And so when, for instance, we purchased this in 2024, spending about 2,500, and in 2025 when we purchased it again, we went that high. So, and that is by trying it like that I'm thinking that, yeah. And you can see at the beginning of the year around 5,000, and by March I was okay to double it. And that is why, after trying that I'm thinking that, well, I think it will work to continue investing in the account and trying to set an amount per trade that is going to be less than how much, or less or equal to how much I'm able to save and put in the account every month. So that is one way you can view it as well. When it comes to the amount you can start swing trading with, start with how much your brokerage company say that is the amount you can open an account with. If that's $0 you can open an account with, then your next bet is for the stocks you want to purchase, how much is selling for per share. That is the minimum you need to start swing trading, and keep saving in the account to keep growing your capital that you have in the account, so that each time a stock is well set in your watch list for you to buy, you'll have some money to buy at least one share. Again, when you start swing trading, it's good to buy at least one share of that stocks to see if the stock is well comparable with the strategy you are using. And the goal is to make at least $1 profit after you pay your brokerage fee. Again, it could depend on the strategy you are using as well. But for the strategy that I'm using, I think that is a safe approach to it. And once you confirm that your strategy works well with that stocks you purchase, next time you are going to buy that stocks again to increase the profit, you just buy more share. So I think that is a safe approach to it when you are learning to swing trade and you wanted to do things safely. But again, you have to put it into perspective. The way I view those things is a lifelong skills, is a lifelong things. It's now learning all it is to know about swing trading and be the best at swing trading. It will come over time. Enjoy the process, enjoy the journey, and continue learning, continue improving your strategy. Don't wait until you know everything about swing trading before you start, but continue improving, because your experience will shape the way you are doing it and make a lifelong learning out of it. Just expect that you will keep learning it, you will keep improving it. Therefore, you don't need to wait to start. And I think with that in mind, my approach might be the way I approach things could be different from you. For instance, if you wanted to know how to do it and be done with it, or if you want to start making money, a significant money from swing trading, your approach might be more aggressive. But when it comes to me, I wanted to make a lifelong experience from it. Therefore, something that even after I retire, that's something I can continue doing, simulating my brain and making money in the process as well. Therefore, and I have a job, a full-time job. Therefore, I'm not looking for something that can provide for my need right now through swing trading. So if that is your approach, your strategy will be different from mine. But having a backup plan, having an optional a way to make money beside my paycheck, so that I don't constantly rely on my paycheck to provide for our need, or to help my husband provide for our need, is what a swing trading is for me, to create another source of income, to have another option of making money. So therefore, I take my time with those sort of things so that I can enjoy the journey. I'm not trying to just make all the money it is there to make swing trading and have it there to spend, or making money right now from it to supplement our income or our paycheck or anything like that. So I use more a laid back approach with it, and keep learning, keep twinkling, keep improving, and keep growing. But again, that I'm saying those so that you can put my advice into in perspective, knowing that if, depending on your goal you are trying to reach, you know that maybe it may not work for you. So, and I don't think swing trading will be something we wanted to replace your paycheck with right away. You have to build it to that point. So if you do not have a paycheck, you do not have a job right now, finding one so that you can provide for your need, so that you don't put a lot of pressure on your swing trading, could be an approach. That way you can have a way to find some capital to fund your swing trading account, could be as well. But again, it's not the only way. But if you have a job, you are making money outside of swing trading, and you want to create a source of income through swing trading, this approach might work for you. To take your time and be cautious so that you do not lose all your money by taking risk that you are not ready for, or your accounts cannot afford to take, and you do not lose sleep over your trade either. Thank you so much for watching our videos. We thank you very much for your time. We thank you very much for watching our videos. Thank you for your comments. And thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoup.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to save money. Just start small and grow your account from there. Thank you. For more of our swing trading tips, will you please check the playlist in the description of this video. Thank you for your time.